Hello and welcome to your Recipe for Financial Success with me, Emma, and my colleagues Becky and Julie.
In each episode, we'll be bringing you a list of ingredients to help you cook up a storm and master methods to finesse your finances. We'll be helping you expand your repertoire and hopefully teach you a few new skills along the way.
So, clear the counters and get your mixing bowls ready for today's recipe. Let's get started.
How was your weekend away then, Julie?
It was really, really good. Thank you very much. I went down to Cornwall with Deb.
Deb, as in Deb, the relationship coach that we had on a few podcasts ago?
Absolutely, Deb Morgan, yes. So the real relationship coach. I think she's a real relationship expert. So if she's listening, sorry, Deb. But yeah, no, we had an absolutely fantastic time. Lots of fun was had. And we also got to meet up with Kelly, who was our first Money Journey guest as well.
Oh, very nice. That sounds good to have a nice old catch up. I'm guessing it's been a while since you've seen them all.
It is. It's a bit like a podcast tour, to be honest, around the country. So no, yes, Kelly had got some really fabulous things lined up because it was Deb's big birthday, and we had a really, really good time. So
very nice too. Well, as Kelly told us lots about her business previously, good topic today that actually links back in well to businesses. We're talking about business protection today, but Julie, do you want to tell us what is business protection exactly?
Well, actually, this is going to be part one of our business protection kind of podcast because it's actually quite a big topic. When I first started looking and researching what we were going to cover, I thought we could be going on for hours and hours and hours here. And actually, they're quite complicated topics. So I kind of made a decision that we should kind of break this down into more than one section.
That's a good idea. Sounds good to me. So business protection, what are we looking at today then?
So today, business protection is one of those topics that I think gets overlooked a lot. And I think that's quite a concern because I think it's actually a really, really good thing to have. Mm-hmm. And basically, business protection is designed to help business owners plan for the unexpected. So over the past few weeks and months, we've talked about protection for like mortgages and protection for families and things like that.
Or we've talked about life, all the D's we talked about, didn't we?
Absolutely. But actually, our business is actually the very thing that provides us the income which we're talking about protecting. And we don't actually, a lot of the time, we don't look at actually protecting that before it even gets to the stage of needing it for your family. And I think that's one of the things that we're going to be talking about today, because I think it's something that people don't have in place, and it's really important there to be there to protect against the unexpected. Basically what it does is business protection is designed to provide you with a financial injection when it's most needed. So essentially for today, we're going to be talking about key person insurance, and it's there to, like, in the event of a loss of a key employee through death or critical illness, or basically like a total or temporary disablement, so that they're not able to be and do their job, which is, when they're a crucial part of the business.
I see. So all the really important people in your business that you can't kind of survive without, they're the people we're looking at today and the type of protection for them.
Yes, absolutely.
So what kind of companies can have business protection? Is there any sort of restriction?
No, there isn't. So you can have cover in place if you're a sole trader and you have somebody working with you, or a partnership, or a limited company. There's cover available to cover all types of companies.
I see. So why, as a business owner, should I be thinking I need protection for my business exactly?
Well, I do like, as you know, a good statistic.
Yes, you do.
And there was some recent research done which has shown that more than half of UK businesses would fold within a year if they lost a key person in their business.
Wow.
So I know, that's quite scary, isn't it? So, and apparently for a healthy 45-year-old, there is a 1 in 29 chance of dying within the next 10 years, according to the Office of National Statistics.
Wow, that's really scary too, Julie. I wouldn't have expected that at all.
I know. And if you think about, when I actually read that, it made me think about when we were talking about premium bonds and how there's a 1 in 34,500 chance of you winning on a premium bond. But actually, there's the odds of you dying is actually, and I'm 44, so actually it's quite terrifying, really. So
bearing in mind you have one on a premium bond once, so
yeah, I got £25 once, didn't I? So yeah. So actually, yeah, it was quite a terrifying statistic there. So an important question to ask yourself as well when you're looking at this is, what would happen to you or your business if there's a key person who wasn't there tomorrow?
This is very true. Like me, if I was missing from your business, Julie, you'd be lost, I know.
I'd be devastated. I mean, honestly, I just don't know how we'd continue. Okay. Shh.
Oh.
Don't tell Emma.
Thanks. Anyway, so do you want to tell us more about what a key person is and who you would consider to be a key person? Am I one or not?
Well,
Let's find out.
Hashtag awkward. So basically, a key person is any member of your team or your staff who has a direct impact on the business's profits. So does that count you, Emma?
I think so.
Oh, okay. So you're a key
Slightly.
person. Okay, we'll let you get away with that one. So that could be the business owner, a director, or an employee with specialist skills. So say, for example, you had someone who is who like a top salesperson who brought in a massive amount of income for your business, which was then was obviously brought in profit. They would certainly count.
I suppose like your office manager, if your office manager does absolutely everything for all of your admin wise and runs everything for you like clockwork, if without that person things wouldn't happen, things wouldn't get done, nobody would know what to do, then I suppose they'd be considered a key person.
They would be. It'd be slightly harder to calculate a profit, a figure to an office manager. But yeah, absolutely. Somebody who makes sure everything gets done is definitely really important. Also something like, say, for example, in manufacturing, someone who can only design who creates a certain piece of machinery or sort of creates something, or a designer where they've got a manufacturer and they're the person who creates the items that meets a client's needs. And there's nobody else who's got that skill set. So that would be somewhere as well, would be quite would be considered a key person.
I see. So you just mentioned about having to calculate for a person how, like an office manager, how much kind of cover you'd need for them. Is there a way to kind of calculate that, or?
So basically, to calculate what you need to do to calculate what you need, obviously we're in financial services, so this means that every business is different. So there's no hard or fast rule, because of course not. Why would they be so simple?
Well, no, nothing's ever simple, let's face it.
So firstly, you need to identify who your key persons are, and then you need to work out their value to the business.
Mm-hmm. So how do you do that?
So what you need to do is try and identify what profits they're directly responsible for. So for example, if it's a salesperson, that's quite simple, because you'll be like, that person brings in £100,000 of profit a year. And that's and if the company has a turnover or has a profit of, say, £1 million, I'm getting quite big figures here, which are nice and round because it's a 10%.
Yeah.
So we could do that. So they bring in £10,000 of profit a year, and the profit of the company is £100,000. Mm-hmm. So that's a 10%. So that's a good way of calculating it. For an office manager, like I was saying, it'd be slightly harder to equate. You'd need to kind of work out what you thought that would relate to.
Yeah.
If it was a designer who designed something and that brought in all the profit for the business, it could be 100% of the profit. If without that person, the company would not survive. So you need to kind of equate a percentage amount of your business to that person, or a number, really. So
I see. So we've worked out kind of how much value that a particular person brings into the company. What do you do next?
So next up, what we need to do is basically, you've got the amount of money that they bring into the company, and then we have a rule of thumb.
A rule of thumb?
Well, we do like a good rule of thumb in financial services.
Yes, we do.
So get that thumb out and let's see what we can actually do with it. And what we'll then do is, so if we talked about somebody bringing in like £10,000 or £100,000 of profit into the company,
Mm-hmm.
and then we would look at be that gross or net. And what we then say is, say for example that was gross profits, you then times that by 2 to
Mm-hmm.
come up with the amount of cover you'd be looking to get in place for the person. Or if it was a net profit, you times by 5.
I see.
So for the example given of £100,000, it could be that if it's 5 times net profit, it would be £500,000 worth of cover you'd be looking to put in place.
I see. That's really clever to have some kind of rule of thumb, because it's one of those, otherwise it'd be a complete stab in the dark to actually know what cover you do need.
This is it. But also you might have an external requirement. So for example, I've looking at cover for a client recently, and there was an external third party making a payment into the company, and they had their own requirements for the figure that they wanted. So it actually was higher than the rule of thumb, but it was what they wanted. So, you go with what's...
To accommodate, if someone's lending you some money, I suppose, so you kind of jump through the hoops and do what they want.
Absolutely. So yes, definitely.
So we've decided on how much cover to put in place. How do you decide on a term?
Well, again, of course, this varies, as you'd expect it to vary, and this really depends on of how long you want how long that key person is going to be in place for you. So it could be that if you look at their age, to say, well, they're now 40, they're going to be with you for another 20 years, so you'd be looking at a 20-year term. Mm-hmm. Or it could be that you're actually going, well, actually, I'm going to be retiring in 10 years' time, so at that point, in a nice possible way, key man cover is going to be someone else's problem if I'm going to sell the business or I'm going to sing over the business. So it could be you just look for a 10-year term. So it really depends on the circumstances of the key person and also you and how long you're going to have the business running for.
That's really clever. Good plan to figure that one out as well. So we've thought about the cover and the term that we're going to have it in place. What happens if the money is paid out? What do you actually use that money for? Where do the proceeds go and what do you do with them?
Well, essentially what happens with key man cover, because it's actually set up to be by the company and it's paid for by the company, and that means that the company is actually the beneficiary. So that money actually goes into the company. And there isn't anything in particular that you need to do with it. It is actually for you to use as you see fit. So it could be that you're going to be using it to replace the person who is obviously no longer with us, whether that's through death or through a critical illness. It could be so to recruit that person or for training a replacement for that person. Or if you know they're coming back, it could be there to basically keep the company ticking over until they could be come back to the company.
Get back in full swing of things.
Whatever you need. So general business expenses, keeping up morale, your clients may be concerned that this person has left and it's like, what are you going to do? And they're going to want to see that you've basically, everything's still going fine. Look, so-and-so has left, but we're recruiting, we're replacing, and everything's still going fine. Don't worry, we're still able to provide whatever you need to do, provide the orders or the service, whatever it is that you do. And they can see that that's actually all in place for them still. So it gives peace of mind to your clients as well.
So it's quite flexible as well. So you're not restricted that you have to use it for a particular purpose.
No, you haven't. But what I would say is to make sure you don't leave it sitting in the company.
So what happens about how it's taxed? I know this always gets a little bit complicated with tax normally, but give us an idea, Julie. What happens with the taxation of a key person cover?
Okay, well, we'll look at the premiums first because I think that's the first. Let's start at the very beginning. So because it's basically set up to cover the loss of a vital company employee, the insurance premiums are typically treated as a tax-deductible expense and therefore they're eligible for corporation tax.
Woohoo! Bonus.
Excellent. That's very good indeed.
So that's the premiums. What about the actual benefits? So God forbid something happens, someone passes away and you make a claim on this policy and you end up with, from your example earlier, say possibly £100,000 land in your bank account.
Well, it comes in tax-free, which is very nice indeed. However, it is then treated like any other money in the company. So when I said about spending it, that was like making sure that you spend it on things that are relevant for the company. So for example, recruitment, training, keeping the roof over the head and things like that. So you wouldn't be able to
buy a Ferrari.
Probably buying a Ferrari, unless you do something which involves having a Ferrari as something which is a business need, which I'm struggling to think of anything at the moment apart from a Ferrari salesman, not Formula One driver. Yeah, you probably wouldn't be able to buy a Ferrari with it. So it's just it would be treated as normal company money. So it would be the same as if you had any other company money. You wouldn't be able to go and spend it on having your hair and nails done, for example, unless of course that was a part of the requirement of the job role and it was a tax deductible expense. Always check with your accountant on these things, what would be considered a tax deductible expense.
That's fair enough. So what happens if, say it was my company and it's a limited company and I'm the only director of that business, can I take key person cover out on myself?
Well, you can take key person cover out of on yourself. However, you may not get tax relief on the premiums, especially if you've got a critical illness element to it. Because what the thought process behind that is that technically you could be benefiting the most from the payout. So the idea is to provide the benefit for the company if the key person is unable to work. However, if it's just to fund yourself.
Yeah, I suppose
it's kind of...
If you were critically ill and you closed down the company immediately, then it's not being used to keep the company going and to replace you and you're just taking it for a nice time.
Yeah, this is it. So, I mean, again, speak to the accountant is always the best option on this, but,
it's kind of an ethical stance of what you should be doing with the money, really.
This is it. And it's a bit more of a grey area.
So what about... Say I've got a company with lots of different shareholders in it. How about all those shareholders? Could they be covered?
Well, again, this is also one of those grey areas. So it's always good to better check with your accountant, because the taxman can have different views on this. However, it is considered that if you are more than a 5% taxpayer, a 5%, wouldn't it be nice to be a 5% taxpayer? If you're more, I know, if you're more than a 5% shareholder, then the premium couldn't be claimed as a company expense.
I see.
So it's not tax.
So it's only kind of
deductible.
very small shareholders that you could potentially get it. And obviously, how much value will they necessarily bring into the business if they're such a small shareholder, unless they're an employee as well, taking a salary or something like that, in addition to being a shareholder?
Yes, absolutely.
I see. Well, that is a whistle-stop tour of the key person protection. I can see why you wanted to break it down into smaller sections and not have all the different types of protection in one go, because that could get...
This is it. There is quite a lot of different areas to cover, and I think it's quite a meaty topic. And I think, again, it's like probably one that is really good to have a chat with both your financial advisor and your accountant about if you're looking to put something in place. And there's quite a lot of reading to do, and there's tax implications and there's other implications. So it's always really important just to make sure you've got everything covered and it's all kind of makes sense. So
not quite as straightforward as a personal protection where you just take it out on yourself. There are kind of the more details behind it of who's going to benefit, the tax involved and everything. So
absolutely. And obviously our next topic will be about shareholders protection, which is kind of like a whole other kind of area of tax and complications. So we'll save that for another day, though.
Sounds good to me. Thanks, Julie. And with that, we've completed today's recipe. We hope you have enjoyed following along with us today and cooking yourself one recipe closer to a financially secure future.
If you've enjoyed today's podcast, you can head over to www.recipeforfinancialsuccess.co.uk, where you can find out more information and a full list of ingredients from today's recipe. For more hints, tips and tasters, find us on Facebook at Your Recipe for Financial Success.
If you'd like to get more involved, share your own experiences and learn from a friendly community on a similar journey to you, why not join us in our new Facebook group, The Money Compass, where we will support you to navigate your way to financial success.
Thank you for listening and see you next time.